Hello everyone, I am CA Shafali Jain Bang, host for this podcast. So with this podcast, we intend to discuss the key GST issues which actually affect the day-to-day businesses and also the professionals. So here with us today we have CA Yash Dhadda. Hi sir.
Hi Shafali.
The issue that we want to discuss today is taxability of intermediaries. In the recent budget, amendments were proposed with respect to place of supply of intermediaries. So before going to the provision, what I understand from intermediaries is that they're brokers who facilitate the sale between the seller and the buyer. So my question to you is there any legal definition of intermediaries in the GST law?
Yes, Shafali, there is a definition of intermediary as given under IGST Act.
Okay.
And in fact, the concept of intermediary has been only given under IGST Act. We do not have that concept in CGST or SGST Act, which the manner in which the concept of intermediary has been mentioned in place of supply. The government has understood that only in respect of a cross-border transaction where either of the one party, either the supplier or receiver, either the one party is outside India, then in that case we bring in the intermediary. What is the definition? So definition actually, if we break it down, it can be broken down into 3-4 parts. One is it explains they have to be specific type of person. It can be an agent, it can be a broker or any other person by whatever name called, but it has to belong to the same species of the people as the earlier words like agent or a broker. Then it says that it is some person where it facilitates the main supply between a supplier and a receiver. If effectively when you interpret this, what comes out is that to have a concept of intermediary, you would need 3 people. One is the supplier of goods or services. Second, the receiver of goods or services. And third, intermediary who is facilitating the supply of goods or services between the supplier and the receiver. Okay? And last part of that is that the intermediary should not be actually taking such supply on his own account. Meaning thereby it again tells us very clearly that there are 2 supplies which are involved in the transaction. One is the main supply of goods or service between the supplier and the receiver, which can be either supply of goods or supply of service. And then intermediary who is providing the support service of facilitating that main supply.
Right.
Okay. So agent, broker or any other person by whatever name called, facilitating main supply between the supplier and the receiver, and that intermediary itself should not be undertaking the supply on his own account. In common parlance, the examples are typical examples are sales commission agents.
Right.
So there is, let's say, a exporter sitting in India and there is a buyer sitting outside India, and let's say I am the intermediary who is in India. I am helping that exporter to actually connect with the buyer outside India so that the exporter is able to actually sell his goods to the buyer outside India, and I am the person who is facilitating this transaction between both of them. So I am neither buying it nor I am selling it, but I am just ensuring that both of them are meeting and that transaction is actually sailing through. Then in this case there are 2 supplies. One is the actual supply of goods by the exporter to the buyer sitting outside India, and then a supply by me where I am facilitating this.
Right.
Okay. And now I may facilitate a customer outside India or I may facilitate the exporter, meaning thereby I will only have one customer. I will be engaged by either of the parties. So I can be engaged by an exporter in India or I can be engaged by the buyer outside India. That's the concept of intermediary which is given in the law.
So section 13 of IGST lays down the provisions for place of supply. And 13(8)(b) says that in case of intermediary, the place of supply has to be where the intermediary is located. What is happening is, if an intermediary is providing services to a customer outside India and in return he is getting foreign currency also in India, then also his supply is not being given the benefit of export, and he is liable to pay tax in India. So don't you think this provision is against the theme of law that GST is destination based tax?
So what I think is actually secondary, but that's what at least GST Council understood this. you refer to the place of supply. So the conceptually again we have definition of export of services given in the law, where it says that supplier of service should be in India, the recipient of service should be outside India, place of supply should be outside India, I should receive amount in foreign convertible currency in India, and both supplier and receiver should not be establishments of a distinct person. That means they should not be branches of a same company or a person. Now, in case respect of an intermediary, all other conditions were getting satisfied except that one condition, place of supply.
Right.
We all understand the concept of place of supply is effectively that law assumes that the tax that needs to be paid by a person, be it CGST, SGST as a combination or IGST, that is dependent whether the supply is treated as intrastate supply or interstate supply.
Right.
Now, intra or interstate supply is again a combination of two factors, location of supplier and place of supply. In our case, the example of intermediary which I gave, where that agent was sitting in India, sales agent, but if in your example as the customer was outside India, so location of supplier was in India, right? Place of supply for as a concept, for that we had to refer to section 13(8) in respect of intermediaries which you just referred, and there for all other general services the general rule is that place of supply shall be location of the receiver. So if the receiver of service is outside India, then place of supply is also assumed to be outside India, and once it is supplier in India, location of place of supply outside India, that benefit of export you can claim. Intermediary was an exception. It says that place of supply shall be in India. Now because that exception was there, as you rightly pointed out, they were not treated as export. You said whether it is not against the theme of destination based consumption tax. Probably in my understanding again, this intermediary concept is coming from an hangover of service tax regime. This is again not a new provision. It was already there in service tax in place of provision of service rules, which was there in Finance Act 1994. So there also they said wherever the intermediary is located, that is going to be the place where the service is provided or deemed to be provided. So that concept has changed to place of supply. Why they thought it so? Because they said if intermediary is located in India and he is doing everything from India and there is nothing else in terms of resources or otherwise that he needs to actually procure from outside India, except that he is bringing foreign currency into India, because its services are originating and being culminating in India only. That's why that exception was brought. And if you read that intermediary section 13(8), you read it with other provisions for which the exception is there. Like for example, they are talking about banking services where your account is located. Okay, so again, as a concept, they thought exception is required because these services are actually originating and culminating both into that place where the intermediary is located, which in our example is India. But what was the ground reality? The ground reality was because of this provision, as you rightly pointed out, intermediaries were having double whammy. Double whammy was, if let's say I am the intermediary sales agent sitting in India and my customer is outside India and he gives me let's say $1,000 and I tell him along with $1,000 give me Indian GST of 18% extra. Why would somebody sitting outside India give me Indian GST? Yes. He will say, I am least bothered about what GST you have in India. So he would not pay it. Second, if his services would have been export, so we have a concept of claiming refund as an export benefit of all the expenses which I have done on whatever GST I have paid. Because his services were not treated as export, he was not getting a refund also. So the double whammy was, he had to pay 18% GST out of his own pocket because customer would not pay Indian GST. Plus whatever otherwise cost was being incurred, whatever GST was there, I was not getting a refund of it. And that's where it was coming out very clearly that provision is unjust. It is unequitable in nature. Though we do not expect fairness in the law, that's the cardinal principle, that whatever is written in the law, it is written in the law. Do not expect fairness, but there cannot be unequal, or law cannot be unjust. And that's where this provision was challenged across India in various courts. So you are right, the destination based consumption tax as a concept it was to some extent was being fractured here. But I also wanted to point out that this destination-based consumption tax, this concept is not written anywhere in the law. You read any of these acts, CGST, SGST, IGST, you will not find reference of it.
Okay.
So only it's an economical concept. Based on economical concept, law cannot be changed. But yes, these two things which I pointed out, this council understood. And again, this amendment, what we see, it goes back to what happened in 56 GST council meeting. There they agreed that yes, the concept of intermediary would be taken away.
Okay. So with that, they have removed the current provision, and now with that removal of section 13(8)(b), we go back to the default rule. That is, the place of supply will be where the recipient is located.
Correct.
Right?
Absolutely right. So that section, this has been omitted.
Right.
Now that omission itself has lot of implications. How do you interpret omission? So, but yes, as of now, that provision is going to be omitted.
So we understand that this is a welcoming provision for the agents or brokers sitting in India providing services to the customers outside India. But how about the businesses sitting in India and taking services of the brokers sitting outside India? So do you think this provision will also have a flip side?
Absolutely right. So there is no doubt to that. It's like from which side you are standing and from where you're looking at this provision. So in respect of all these third party intermediaries which were in India, they will definitely be benefited because of this. But the flip side of that is all the business houses which are in India and who are taking services of intermediaries sitting outside India. So if I have a sales rep or sales representative sitting outside India, I am taking a facilitation service from somebody who's sitting outside India. Or a very typical example that let's say I am sitting in India, I wanted to start an e-commerce business outside India. And for that I appoint somebody where I tell them that get me linked to an e-commerce, get my goods listed there, and then I'll be able to sell directly. So all these service providers who are sitting outside India, now they will be liable to actually their services, because they were intermediary services, so the place of supply was outside India, right? Now we go back to the default rule. Default rule is the place of supply shall be the location of receiver, which is going to be India, and this falls in the definition of import of service now.
Okay.
Once this becomes an import of service, we have a concept of reverse charge mechanism,
right,
where the recipient who is in India, and if the supplier is outside India and receiver is in India is registered, then in that case they will have to pay tax under reverse charge. So all these transactions are now going to be taxable. Up till now they were not taxable. They were enjoying the benefit because place of supply was outside India. Now they will be taxable at 18% GST rate.
So now all the business houses who are taking broker services from outside India, they'll be liable to pay tax under reverse charge.
Yes, effectively it will impact all the exporter of goods who are actually taking services of sales reps. They'll be majorly hit because of this.
Okay.
This will add one more layer of complication.
And that is?
That layer of complication is that now these intermediaries, up till now, if let's say I was calling myself an intermediary, and now I tell myself, no, I am not an intermediary, my services were classifiable under something else, then in that case, that opens the Pandora box for the previous periods. Whether if I am not intermediary now, then how I was intermediary for the earlier periods.
Right.
So that interpretation scope would open up now for previous periods also.
Right. Though the government is yet to notify the effective date of this provision, do you think it is going to be prospective or retrospective? Again, this is also a beneficial provision. So, what do you think? It is going to be implemented prospectively or retrospectively? And if it is prospectively, then what do we do with the earlier transactions?
So, in earlier transactions, this issue has been a contentious issue and it has been pending before various high courts. In fact, we have judgments from high courts. We have a Gujarat High Court judgment which said where this provision was challenged, and the Gujarat High Court said no, the provision is absolutely right, and you would be required to pay tax to the intermediaries. Then the matter went to Bombay High Court. Bombay High Court gave a split view.
Okay.
where judges had a split view on that. Then matter was referred to the larger bench, and larger bench said no, the provision is absolutely all right. Okay. At other high courts also the issue is pending. There are judgments from Supreme Court where they have interpreted what is intermediary and whether a specific service supplier would fall in the definition of intermediary or not. Specifically, all these education consultants who are giving these services where if let's say a student wants to go outside India to a university, so all those facilitators who are in India and advising you can go to this university, that university and all those things, there in those cases the issue came up whether they are intermediary or not. Courts have taken a view that this is not intermediary, and in fact it has reached finality. Supreme Court has taken a similar view. Okay, but still all those who are intermediaries and they were fighting this cause, no, we still don't want to pay tax because this provision is unjust. For them this comes as a ray of hope, where they would say now the ambiguity which has been cleared, and because the provision was unjust, it should be given a retrospective effect. If you look at jurisprudence from the recent law, so we have two judgments, one from Karnataka High Court and one from Delhi High Court. Karnataka High Court judgment is in respect, that is I process, and that is in respect of clinical trials, drugs. So there again that issue was whether the drugs which are sent outside India for clinical trials, what will be the place of supply of those testing services. Okay, and then by way of an amendment it was brought, though it is not related directly to intermediary, but issue was same, what is going to be the place of supply. Right. An amendment was brought, that amendment was prospective in nature. But in I process, Karnataka High Court said because that amendment is beneficial and it appears to be clarificatory in nature, we will give the benefit for the previous periods.
Okay.
Then we have a Delhi High Court judgment recently of September 2025. That is in context of intermediary only. Okay. So again that issue was asked, I think the name of judgment is global opportunities. So in global opportunities, before Delhi High Court, the issue which was raised is again this intermediary, whether they have to pay tax, not pay tax. Now what had happened during the course of hearings, GST council meeting already happened and press release came out of the council meetings. And in that press release, this concept of intermediary that will be omitted, it was mentioned when the budget amendment would take place, which have happened now. So it was brought to the notice of the court. Court said now any which way when the council is very clear that they want to omit this, why can't we give benefit of this for the previous period? So they did not say that this amendment is going to be retrospective, but they said the benefit should be given for the previous periods also. So they said, so these two judgments are there. That means there is still a good chance to argue that this judgment has to be, that this amendment can be treated for the previous periods. Interestingly, you rightly, when you started, you said that it has been taken away. So there is an omission. Now there is a concept called omission and repeal in law. So whenever a provision is taken away and it is omitted, whether that has been repealed or not. Okay. There are judgments from Supreme Court which says omission effectively dates back to as if it never existed in the law. And when if it never existed in the law, then effectively it means that the concept of intermediary and place of supply as an exception was not there. So all of this is a long battle again. This is not something which I'll be able to put through at a lower level. But yes, there is now a good case to argue that for the previous periods, if I have not paid tax as an intermediary, if I was in India, then I should be allowed to actually not pay, because this beneficial provision, once it will be implemented, it will date back to the previous periods. Okay. When you look at the finance bill also, interestingly, this is section 142 of the finance bill. For section 142, no date has been mentioned. Now, whether that appears to be an omission or that is deliberate in nature, one can't say. Though there is a general note which is given in the memorandum which says that all the provisions of GST, they will be implemented in concurrence when the state legislature would also pass. But for IGST it is not mentioned, because IGST is for that you don't have to go to the state governments.
Okay.
So what I'm really trying to say is, whether it is going to be prospective or retrospective, we don't know yet. And by omitting that date from the finance bill, government also kind of has kept it open. But even if it comes prospective, there is a very good ground to argue that it is going to be retrospective in nature. So all those who have paid tax under protest, who have filed their refunds, or who have not filed their refunds for the previous periods and they have paid tax out of their own pocket, actually they should contemplate to file a refund for the previous periods, and they should contemplate to take benefit of this omission which will happen. Mind you, that has not happened now. It will take place. But once it will be done, then we'll be able to actually see through it that how it would be done.
Okay, so what I understand is that if it is going to be prospective, again there's going to be more litigation.
That again there is a possibility to say that benefit of that should be given for the previous periods.
Right. Thank you so much, sir, for taking out time for us and for our viewers and discussing all these nuances and the complexities of intermediaries and what the law was earlier and what it is now and how we see it in the future, what all litigation it is going to bring. So thank you so much for that.
Thank you, Shefali. Absolutely my pleasure.
Thank you.